Hello traders, how are you all? I hope you're okay. Now we are going to explain in this video how exactly trade a put option using Thinkorswim. Okay, let's just say that we want to trade this this specific option, okay, this specific stock as an option, okay, a contract, CALM. And then our strikes are going to be, let me go to strikes, are going to be, let's say, $30 and then $29. It's somewhere like that. And then it's going to expire on April the 3rd here. Okay, so what we would expect the stock price is to go up sideways or even lower than the current price, as far as it is above $30. Even 30 and 1 penny is enough to get the profit we're supposed to get. Okay, so this is what we are going to do. We are going to buy a contract, a put contract, and the price we expect it to be about 30. Now, I want you to always remember that in order to say I want the price to be like this, I want the expiration contract will be in this date or whatever else, I did my previous research and my calculations before. So I'm just going straight to the moment where we're going to trade. I'm not explaining how I did everything because this is another topic. Do not attempt to do this just by guessing, because then it is casino, it is roulette. It is not really wise thing to do if you don't know what you are doing. Just guessing if this is going to be above or below specific price, this is not trading, this is guessing. So be careful with this. You can lose plenty money. In fact, most people, most traders in the world, they guess. They don't trade, they guess. So this is what we're going to do. Let me bring to you the actual report. Okay, so make sure that you have the right one in the right date. Okay. Here I use a European format, so day, month, year, and also expiration date, day, month, and year. Okay, we are going to trade CALM. The current price is 37.39. This is going to be a put, not a call. Make sure that you always remember this thing. I'm going to sell at $30. I'm going to buy $29. The premium is going to be 0.15. All these things are coming from a study, a research study, and all my calculations that I did before coming to you with this video. So please do not attempt to guess. Expire date is going to be the 3rd of April 20. This is going to be a GTC, good deal cancel, and the collateral is going to be $100. And I want the price, the stock price, to be above the 30 mark, 30 US dollar. Remember this part. This is extremely important. Okay, remember that part. And read all the rest. Please make sure that you know what you are doing. Okay, I spent time writing this information. I'm sending this every single week. Make sure that you know what you are doing. Okay, perfect. So this is what we are going to do. I'm going to put it smaller just for our convenience. Okay, this is the part we need in this case, just for the trade. So let me move this to the other window and put here. Okay, so this is Thinkorswim, and then we are going to CALM. Okay, and this is going to be the stock option we are going to buy, and we are going to trade, sorry. We are going to trade CALM with calm. We are going to trade. We are with calm. April the 3rd, and then this is going to be a put. Now remember, make sure that vertical is always there, not single, to make it easy. All this side, okay, all this side is going to be for calls, but you are going to trade a put. So puts are in the right side, okay? And then according to this report says that this is a put, but not only that, says that I'm going to sell at $30, I'm going to buy $29. Okay, I'm going to sell at $30, is somewhere here. Remember, first sell and then buy. I'm going to put only one contract. And this is CALM, April the 3rd. I'm going to check here. Do you see here? 3rd of April 2020. So this is going to be the 3rd of April, and the strikes are 30 and 29. How do I know that information is coming from this place? Okay, strikes. Here it is. Okay, strike. 30 and 29. So this is going to be a GTC. This is going to be a limit, $15. Again, remember that you can always change the price here. If you confirm, send, and it doesn't happen, wait at least minimum 10-15 minutes and then try changing 1 or 2 cents below. That means that you will get less money, but the good thing is that you are going to trade today, because if you don't give up to 2 cents or $2 in the whole contract, tomorrow you may need to give up to $5 or $7. So you better do that now. Reduce the price, get less money, don't be greedy, but make sure that you have this now. This is the best time to do, okay? So the price is going to be 15, and then I check sell and then buy one contract, CALM, April the 3rd, okay? The strikes are $30 and $29. This is going to be a put, okay? Put means I expect the price to rise, to go up. Can go up sideways or a little bit down, but below what? Below the selling price. In this case, below 30, I will lose. Must be above $30, okay? And then I confirm, and then take this into consideration. Again, this is only one contract, so I'm going to change that in order to do as I did in another video. I'm going to do it again from scratch with 4 contracts. So this is going to be $30, and this is going to be $31. Something is really wrong. It's 29, sorry. Must be a credit, must be a credit. Never buy with debit. You lose all your money. Forget about debit in these transactions. Debit, you have to consider other things. And then you can also get money, but get profit. But please, this is a debit, okay? Should be written here. This is a credit, not debit, a credit. So if you have here debit and a green color, something wrong is here. Green color is something else, okay? Unless you have the accurate information, you're going to have different color, but not only that, that means different results. So let's just check 4 contracts, because I want to put 4 contracts. CALM, April the 3rd, okay, is here. Here. This is a put. Here are puts, 2 puts, because 2 legs. This is a vertical spread. 15, this is the premium. This is going to be a credit, not no day, but GTC, okay? So in this case, okay, here we have the same as we had in another video. 340, that means that this is what is going to be the collateral. However, since the price is $15 per contract, so it's instead of $85, $100. So it will cost you $100, and this is what the company is going to keep. After the deal is done, you're going to see $400, not $340. However, this is the maximum you can lose, $340 in the worst case scenario. If you know what to do and you do that properly, you shouldn't lose more than $20, $30, $40, maybe $60, maybe $80, maybe $100, but never $340. Okay, most likely you will know what to do. This is part of the training we do. We check that everything is okay. In this case, of course, it is okay. And then I send it. I go to monitor. I'm going to see here the option. Of course, this is before, this is prior to market opening. So we don't see anything, no options, no contracts bought here. So let me go to this place. Let's say that this is market hours and it didn't happen. So you go to cancel replace order, and then you change this 1 or 2 cents below, 1 or 2 cents above. Okay, it canceled the previous one and placed our last order. So what I'm going to see here is 14 because I did a change. Okay, and then every 10-15 minutes, even half an hour, you can check. Now you don't need to wait until specific time to trade as soon as you can. Options, stocks is something different, but options you trade as soon as possible in order to get the maximum profit. In this case, I'm going to change, right button here, cancel replace. I'm going to leave it 15 as it was. By the way, you can try also above, 1 or 2 cents above, 1 or 2 cents below. And of course, that is going to impact on the prices here. Remember that 65 cents is per contract, and we have here 4 contracts. Where is it? Here, -4, because we are selling. So 4 contracts we have here. Therefore, is 65 times 4 to sell, and then 4 to buy, 8 contracts, and that is why you have 520. So altogether, instead of getting a profit of $60, you are going to get $54.80. So always consider that thing, okay? And then send, and that's it. It canceled the previous order and placed the right one, the one that I did just a moment ago. And this is all what we have now. It is written here 340. As soon as the deal is done, you're going to see 400. Okay, 100 per contract. Okay, so that is it for now. Thank you for your attention. Thank you for being here. Have a good, great trading day. Blessings.